So a quick update on Smith & Wesson, which I'd mentioned in a couple of videos previously. So I had bought it a couple of years ago between $10 and $12 and then sold it a little over a year later at around like 17 or 18. And it was a nice return for a year, especially with the dividend. But I ended up selling it and moving on to better things. And it's back at reasonable levels. And I'll talk about why. So execution is very important, and these guys weren't good at executing. So in another video, I mentioned Kraken Robotics, which has gone up a lot, and they don't have a patent, but they make these sonar batteries, underwater batteries, better than anyone else. Smith & Wesson makes a product that's been around for a couple of hundred years, but they had some issues. They moved their headquarters from Massachusetts to Tennessee. And I think they thought initially it was going to cost like $100 million, ended up costing like $120 million. And they thought it was going to save them a lot of money. It saved them a little money. So the execution hasn't been there. And I usually like to see insiders buying stock, but I don't see any insider buys, only insider sells. And they might talk a great game about how wonderful the company is going to do, but they haven't shown that with their wallet. So when it did get to this price, I was sort of fully invested, so I didn't want to put much into this, but I did put some options in, and I bought early. I bought around this price, thinking that if it gets to 12 within a year or two, then my options will be in the money. And it did the opposite. It went down to $7 and change. So I didn't sell the options. I actually sold some puts and sort of increased the position. And now the stuff I sold when it was around $8 is in the money, and the stuff that I bought when it was at $10 is not in the money. So I'm sort of back where I started, but it's got a couple of years to play out. They are making money. They are buying back shares because it's trading at a cheap multiple, but they are facing headwinds because the entire firearms industry is down. So a lot of people bought guns in 2020, 2021, and that sort of dropped off a cliff. But this is a very valuable brand, and you're getting a nice dividend while you wait. So not a lot of things have to go right for this to do well. And at this price, I'm holding on to the options that I have, but I did not buy the common, and I don't intend to, just because if I wanted something with a big dividend, there are better ideas out there. And since I don't have a weekly paycheck coming in anymore, I'm semi-retired, I am more conservative with the things I'm betting on. I do have some shares of this and the preferred, which are kind of interesting. This went up a lot today. And speaking of execution, this is a company that made ammunition, but they opened up also new headquarters and had trouble running the factory and making things profitable. So again, execution is important. They sold off the ammo to somebody competent, and now they run their website, which is a gun broker. It's kind of like eBay for guns. And I have a few shares of this, but I have some options as well, which I think are going to do well because this had a lot of hair on it when I bought it, but the company seems to be turning around, and I might do a separate video on this. But anyway, I just wanted to give an update on Smith & Wesson, which I had done a couple of videos on before, and I owned it profitably and then sold it, but probably won't go gangbusters for the next year or two. But as I said, you're getting paid a decent dividend to wait. This company has been around since 1860. There's not much debt, so there are worse ideas there. This looks like a high PE ratio, but that's only because the earnings have gone down. The price didn't go up, and normally when you see high PE ratio, the stock getting bid up, the stock's not getting bid up, it's getting bid down. It's just that this company and Ruger are down a lot because the industry for guns sales are down all over. However, Smith & Wesson and Ruger are not down as much as the rest of the industry, so they are taking market share from competitors, which means that over the long term, they should be one of the survivors. But anyway, that's a quick update on Smith & Wesson, and I may do a separate video on Ruger, and I'll do an update on Ammo Inc. So Ammo Inc. is POWW, and I do have options in that. And I also have this preferred issue, which is called POWWP. And this is kind of hard to get. I can't trade this on Schwab and I can't trade it on Robinhood, but I can trade it on Merrill Lynch. So that's the only place I own it. And it's $25 par, but it pays a 9% interest while you wait. So there's a pretty good chance that this year Ammo Inc. or Outdoor Holding, they changed the name, will buy this back at 25 and you'll get 9% while you wait. So to me, it seemed like a decent place to park my cash. And again, this isn't me telling you to buy or sell. This is just me walking through my process. And why do I think they'll offer to buy this back at par and get rid of that 9% obligation next year? Because they sold off their crappy money-losing ammunition business, and now they only have the website Gunbroker, which doesn't take a lot of money. And the whole company is about $170 million, but they have way more cash than they need. So this debt is part of settling a lawsuit with a former founder, and they issued him some debt and some warrants. This was actually $50 million, not $23 million, but they bought back several million of it in exchange for warrants. So he's going to get a bigger equity slice in exchange for ownership in the company, which should align his incentives with the company, and $63 million in cash. So if you deduct the debt from this, you've got a lot of cash that you don't need. And so if you're going to park it in the bank and get 3 or 4%, why not redeem these shares that you're paying 9% on? And even if they don't, that's a decent place to park your cash, in my opinion, which is why I have a little bit of it. So I have these shares in my Roth IRA because Roth income is not taxable. And so if I had this in my regular taxable account, 9% after tax would probably be like 6%, which isn't bad, but 9% after tax, because it's in my retirement account, would be like getting 12% interest guaranteed in my taxable account, which is unheard of. So anyway, that's my thought on those two. And I may do some other updates. Leave some comments if you have something you'd like to look at or discuss, or you have any questions. And again, this isn't a recommendation or buy or sell. It's just me walking through my process. And if you'd like to support the channel, there's a Buy Me a Coffee link. Don't feel like you have to, though. Have a great day, everyone.